Happy Friday, you magnificent melon heads. It is February 17th, 2023. Opening bell go ding, and stocks look set to continue that big sell off from the end of the day yesterday. I don't know what happened right around the closing bell. Dow ended up selling off 431 points to close the day yesterday. Looks like reality is starting to set in. I talked about it in a video a couple of days ago. Some of the bulls didn't want to hear it. Sorry, guys, call it like I see it. The Fed is going higher. They're going to stay there for longer. All the data supports it. All this economic data that showed we got the beginnings of a second wave of inflation starting in January. That means a more aggressive Fed, more rate hikes, which means tighter credit conditions, which means more expensive credit card bills that everybody insists on keep running up. And, well, that means defaults. That means we're getting more and more likely to see some kind of a major credit event this year. And, well, that's not good for stocks, and they're starting to realize it. But enough about that. Let's shrink my big melon of a head and see what's going on in the markets today. We've got the S&P has opened down about 25 points or 0.62% at 4,065. The Dow is down another 19 points. That can't be right. Are we only down 19 right now or 0.06%? Let's refresh that and give the Dow just a minute here. There we go. That's a little more like it. See, my windows are a little slow to update. The Dow is down 130 points this morning at 33,527. What a difference that made. And the NASDAQ is down 78 or 0.66% at 11,778. So yesterday's sell-off is continuing. Real quick, looking over at the CNN Fear and Greed Index, we are still running very deep into greed territory right now. We were right on the brink of extreme greed yesterday, and I was warning, hey, guys, markets are getting a little frothy. Well, we're kind of still in the frothy end of things, so the market could head lower from here. Looking over at the DXY, we've got the dollar is up again today at 104.31, up 45 basis points. It was up significantly more than that earlier. Not sure what happened right around 8 a.m. today. We had a little bit of a sell-off in the Dixie, but right now it's headed back up. Dollar goes higher. That means stocks and asset prices go lower. There's two things you really got to watch in this market right now. That is the Dixie, and the other one is the 10-year yield, both components of the great Greg Manarino's MMRI, which is on the rise, of course, because those things are on the rise. Taking a look at the Dixie, we had a big breakout this week in the DXY. We had, for the better part of last year, this trend straight up, and then starting in October, we started this trend straight down. We got almost to 100, and we bounced hard, recaptured the 50-day moving average this week, broke out strong above that. So right now, looks like the Dixie is heading higher, at least in the short term. We'll see, are we going to resume that trend from last year, or is this just a bounce on the way lower? Only time will tell. Looking over in the bond market, we have got yields are up across the board today. Looks like they're up a little bit more on the long end. The 10-year is at 3.88, up another 4.5 basis points this morning. The 10-year continues to rise. And take a look at this trend right now. Again, starting right around the FOMC when Jerome Powell made his, in my interpretation, rather hawkish comments. But the market heard him say disinflation 11 times, so they just decided to rally. Again, you take away the disinflation word, it was actually not a very dovish speech by Powell. Anyways, we're heading higher here, folks, since the beginning of the month. And now we're retesting this prior high from back in December. We were above it earlier this morning. We've come back below. So watch this level right around 3.89, 3.9 if we run into a little bit of resistance there, or do we just blow right through it? Keep an eye on that over the next couple of days. All right, on to the commodities this morning. We've got gold is down another 15 bucks at 1836, down 0.83%. Poor silver down another 40 cents this morning, or 1.85% at 21.31. Again, this is a function of the strength in the dollar. The dollar goes up. Assets denominated in dollars go down. Also, those higher interest rates, not good for precious metals because bonds are considered competition for metals. Metals yield nothing. So when yields go higher, you have people start to dump their metals and buy into bonds. That's not what I do, but that's what other people do. So that's probably one explanation for why the metals continue to get beat down. And of course, you've always got the rigged game over at the big bullion banks and their precious metal trading desks, which are, according to the government, criminal enterprises. So that's always going on also. Elsewhere in commodities, we have got WTI crude. Wow, continuing its march down, getting absolutely bludgeoned this morning at 75.69, down another $2.80 or 3.6%. And elsewhere, natural gas is down another dime or 4.27%. Let's take a look at those. We got a big breakdown in oil today. Look at that one. Back below the 50-day moving average, falling out of this wedge pattern. Not good. Those inventory numbers for oil, I've been watching them for a couple of weeks, talking about them in a few videos. For whatever reason, we are just not using oil. We're not manufacturing as much stuff. We're not consuming as much energy as it petrochemicals. The economy is slowing, and you can see it in the oil inventories. You can't fake oil demand. You can fake all the government data, and you can count people at McDonald's 5 times to make the jobs market look stronger, but you can't fake oil consumption. And right now, the market's just not using that much oil. Prices are heading lower. Natural gas, this is one, guys, I know you want me to pull the trigger on this one. I have still not pulled the trigger on the natural gas trade. I've been watching that 9-day moving average. Now, I know UNG broke above the 9-day moving average earlier this week, and a lot of you looked at that as a signal to buy. I've been watching the underlying commodities, the natural gas futures, and it got close to that full green candle above the 9-day moving average, but we never got it. So I'm still not in that trade right now. Natural gas down again today, currently at 236 and heading lower. So the big story and what I think is driving these sell-offs, I think it is the Fed and it is reality setting in. And I've been showing this CME Group Fed Watch tool a lot on this channel lately. This uses interest rate futures to handicap the probabilities of another Fed rate hike. This is what the debt market is betting the Fed will do. And all week, we have been watching this number get bigger. This was down around 1 or 2% at the start of the month, where basically nobody was betting on a 50 basis point rate hike at the March meeting. Well, right now, we're up to 79%, a near certainty of another 25 basis points in March. But look at this, now up to 21% of a likelihood of a 50 basis point rate hike in March. That has been steadily growing every day since the FOMC, and then we had the jobs number, and then we had the CPI print, and then we had that retail sales number. The Fed is going higher for longer. Stocks, as always, are the last to sniff this one out. The bond market has been calling it for days. And we go more beyond that. Looking at May, they're now talking about a 73% likelihood of 2 25 basis point hikes by May. And look at this, an 18.9% chance that we get 75 basis points by May. So that means another 3 25 basis point hikes. And on it goes all the way out through June. They're even starting to price in now up to another 100 basis points of rate hikes through June. That has a 12% likelihood. That was down around 1% just a couple of days ago. The Fed is going higher, and they are staying there for longer. One of the reasons why, well, check out this beyond ridiculous story from yesterday. And this is now the second time in a couple of months I have had to do this. DoorDash earnings. DoorDash stocks pop after revenue beats and rosy guidance. DoorDash, a company that they'll go out and buy your food. They'll get your McDonald's. They'll pick up your Applebee's and deliver it to your house. It's the only way to make an expensive meal more expensive is to have DoorDash bring it to you. Well, they had better than expected sales for the fourth quarter, and they gave upbeat guidance for the current period, which just makes me say, America, go to bed. You're drunk. You are drunk on credit. Look at your credit card bill, Americans. Almost $1 trillion in credit and getting bigger as the interest rates on this credit rises, and yet you're paying DoorDash to go pick up your Applebee's and bring it to you. Look, I get it. You like the Applebee's, their steaks. Okay, they're okay. They're okay. It's a decent meal. But it's already too expensive when you eat at Applebee's. When you pay some kid to bring it to you, it gets even worse. Stop doing this. This is how I know this economy needs to go lower. We are just not making good financial decisions, folks. All right, moving on. This one, oh boy, this is messy. We're going to cover this one real quick. Crypto giant Binance moved $400 million from their U.S. partner to a firm managed by CEO Zhou, or Changpeng Zhou. Turns out Binance had their own little Alameda research on the side. And when I say Binance, I mean CZ. And look, I've been bashing CZ for a while. I think he is one and the same as Sam Bankman-Fried, just without the fro. And, well, turns out he's got his little trading firm on the side that it really looks like, it hasn't been proven, but it really looks like they've been commingling customer funds, and that Binance US was supposed to be this US-based siloed entity that was going to be in compliance with US regulators. Turns out it was really just a front, and they were doing the same thing that FTX is doing. I don't know what's going to come out of this story, but this is huge that they just took $400 million from Binance US and sent it over to a hedge fund, a trading firm that is run by the CEO of Binance, Changpeng Zhou. So more commingling of funds. And again, the shenanigans over at Binance and this regulatory crackdown, I think that is 100% behind what we are seeing with this big run in Bitcoin, currently at $24,130. I just don't buy this run up in Bitcoin. There are regulatory buzzards circling, and the crooks and the cockroaches are scurrying with a light shined on them. I just don't see a lot of good happening in the crypto markets in the next few months. I do believe in Bitcoin long term, but in the short term, not so much. All right. A couple other stories. We got the layoffs are continuing. That's not the one, not the Dropbox story. We're looking at the DocuSign layoffs. They announced as tech layoffs continues to rack the industry, DocuSign has announced plans to lay off 10% of its workforce. Yet another round of layoffs. This is going to affect about 700 employees. DocuSign, that's one of those pandemic stocks that ramped up a lot of production when the work from home trend started. A lot of us use DocuSign these days. Company's not going away, but they grew a little too big too fast and laying off another 700 people. Not a big trend, but again, take this one more anecdote with all the other anecdotes of layoffs and this story about the strong jobs market. Again, it's just bogus. It is BS. The labor market is not nearly as strong as they're telling us. We've also got Coyote to announce layoffs on Friday, according to sources. Now, this is a smaller layoff. There's only about 200 employees to be laid off. But this is important. Coyote is a subsidiary of UPS. And the reason I mention this is this one sentence here: significantly lower truckload volumes at Coyote, which sources said dropped from over 8,000 non-UPS loads per day to approximately 6,100 non-UPS loads per day over the last year. That is a 25% reduction in moving stuff. I don't know what stuff they're moving, non-UPS loads. Just movement of freight is down 25% according to this data point from this one company, Coyote, that is now laying off about 200 people. The economy is slowing. The recession is coming. It's already here. They are juking the statistics to make it look like we're not in a recession, but that is the reality. And again, markets starting to finally sniff that out this morning as they are selling off again, continuing that trend from yesterday. And I saw one of you guys in here this morning. Where are you? Let's find that. I saw a colored bar flash across the screen. Where is he? Come on. Man, you guys are active in the chats this morning. There he is. Dan Hedin. Thank you, sir. He says Tesla finally going to lose. No idea why it's on a 100% run. Look, I don't follow Tesla stock that closely. I don't really believe in the electric vehicle transition. I just don't think the grid can handle it. 10 years from now, at the rate our grid is deteriorating, I think we'll be lucky to have lights and running water, let alone take all the transportation energy demand and put that on the grid. And by the way, electric vehicles, their charging time triples and their range gets cut in half during extreme cold weather events. So the load that electric vehicles place on the grid increases dramatically right at the time when the grid is most vulnerable. So I just don't see this unicorns and rainbows pie in the sky. 10 years from now, everybody's going to be driving a Tesla. I just don't buy it. They're awesome cars. I've never driven one, but they are admittedly awesome. Everything I've read about them, and a lot of guys who are way more into cars than I am swear by them that they're awesome. I'm not saying they're not awesome cars. I'm saying the grid can't handle it. And look, we don't know how to run a grid. We don't know how to fix the grid. We can't maintain our grid. So the math is hard. Math is a problem. And all the best intentions and good ideas, if the math doesn't line up, it's not going to work. And that's my opinion on electric vehicles. That's why I don't touch Tesla stock. All right, guys, we're going to call it there. I want you guys to have an awesome day. Reminder, this is Friday, so this afternoon is my weekly long-form live stream where I get to talk to you fine people starting at 3:15 p.m. Eastern Time. Want to send a shout-out to my Patreon supporters. Thank you guys so much for everything you do for the channel. There is a link down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. And until next time, live small and dream big.